Hey, Josh Kelly here, Citadel Benefits Group. We get a lot of questions because when we go to set up the SMRT program, there's a lot of moving parts, and sometimes in different companies, people are working in different silos on things. And so I want to shoot this video for the business owner, the manager, the person paying the bills to make sure I clarified where all the money's coming from and where it needs to go. So let me share my screen here and we will dive right in. So what we're calling this video is, hey, I thought the SMRT didn't cost me anything. Well, nothing's free. We talked about that before, but I want to help you understand payroll taxes, the 941s, and all of that. So, if you have not seen the presentation completely on how the SMRT works, this won't make as much sense. So let's hit pause on this right now and go back and watch that presentation because it'll make a lot more sense to you after the fact. Okay. So if you have seen it, great. Stay with me here. So let me give you an example first. We've got an employer and an employee. The employee makes $20 per hour. Okay. That employee worked 40 hours this week. 40 times $20 is $800, right? So the employer owes the employee $800 in wages. Makes sense, easy and simple. Now, on that employee doesn't get a check for $800, right? That's not what is deposited in their account because the employee owes taxes. So it's the employer's job to withhold those taxes from the employee's check, plus anything else the employee elects to purchase. So the employer pays the employee the remaining money. All right, so let's look at a check stub example. Matter of fact, this is the one from the presentation. So we've got the gross pay of $5,000. So that $5,000 there is what the employer owes that employee for working is $5,000. Now, the money that goes into that employee's account is $3,446 and 68 cents. Now, the difference there, the deductions, that 1,553.32, that's the employee's money. The 3,446, the 1,553, that adds up to that 5,000. Both of those two numbers there on the bottom is the employee's money. Now you're paying that employee money, but they work for that, so that's their cash. But you're withholding that 1,553 out so you can send it other places. Well, let's dive into those deductions. Okay, so the total deductions right there that's highlighted in red is that 1,553.32. So there's two different categories here. You've got taxes and you got insurance. All right. So you got the federal of 714.49. You've got Social Security coming out for 291.40. Medicare 68.15. State is 179.28. And then you have some health insurance coming out for $300. Well, you add up all of that, that's that 1,553.32. You can do the math there. Those deductions plus the net pay is $5,000. Or you can say the $5,000 minus the deductions is the net pay of $3,446.68. All right, so let's talk about where that money goes. Okay, so you got taxes and you got insurance. So in this example, you withheld $1,253.32 out of that employee's check because this is how much that employee owes in taxes. So it's your job to hold that out and send that into the government for him. But that's not all you're sending in on those taxes because you're responsible for matching every dollar the employee pays for Social Security Medicare. You have to match that. So in this example, that employee paid $359.55 towards Social Security Medicare. Well, you have to basically double that. You have to pay that too. So the top part there, the 1253.32, that's money that came out of the employee's check. That's that employee's money. But that 359.55 is real money out of your account as the business that you are paying above and beyond the payroll. So you add all of that up, the total payment to the government there is $1,612.87. Now, the majority of that is going to be paid on your 941s, which is your federal, Social Security, and Medicare. The 941s is your federal. Then the state taxes goes to a different place, depending on what state you're in. Totally different process, but that all goes to the government. That's $1,612.87. Now, on the health insurance side, The company's going to get invoiced from, let's just call it Blue Cross Blue Shield, whoever the insurance carrier is. They're going to say, hey, Mr. Employer, Mrs. Employer, this company, here's the bill for this insurance. It's $300. Well, you held that $300 out of that employee's check, so you have to send that $300 you held out to the insurance company. All right, makes sense. So now let's look at an example after we put our SMRP in place. So gross pay is still $5,000. This is how much you owe that employee. We owe that employee $5,000. We're going to deposit $3,446.68 into their account, and we held out the same amount, $1,553.32 in those total deductions right there. Well, these deductions are going to look very different after we implement the SMRP. So let's break that down. So on the tax side of things, the federal went down to $513.51. The Social Security went down to $235.60. The Medicare's down to $55.10, and now they only had to pay $144.32 in state taxes. Now on the insurance side of things, we've got the health insurance still is $300. Now you have an admin fee of $80 that the employee pays. That's that employee's portion of the wellness plan we talked about in the previous presentation. And then we're just going to simply add up those four insurance policies there into one line item so it's easy to look at. So the supplemental policies there equals up to $224.79. So you add all of that up back to that total of $1,553.32. Same math as before. You've got deductions, your net pay, that's that $5,000. All right. So where does this money go? Well, you've got $948.53 in taxes there on the left-hand side that has to be paid into the government. As we said before, the employer match is $290.07. Obviously, this is lower than it was before, which is a good thing. You add up that $948.53 that the employee is paying, plus that $290.07 that the employer pays. Now that total payment to the government is $1,238.60. On the insurance side, same as before, but it's a little different now. So before we were only talking about one insurance carrier. In this example, there's going to be three different bills here. You got one for the health insurance, you got one for the admin fee, and then one for the supplemental insurance. That's three separate companies. Now, this is also why we use the TPA, the third-party administrator, to consolidate all the billing so it's easy for you. And we'll talk about that in a minute. So here you held out $300 for the health insurance. You have to pay that company. The admin fee has to go out to them, and then the supplemental insurance has to go out as well, that $224. All of that on the right-hand side was completely held out of the employee's check, out of that $5,000 that was owed to that employee. So that's that employee's money that you're sending to different places for them. So here in the top left, that's our before check. And so specifically talking to the employer here, the match, what you had to pay real money before the SMRP was put into place was $359.55. That's that Social Security and Medicare match. That's real money. Well, I love a good deal, and you probably do too. And anytime I'm going shopping, I look for coupons. Anytime I'm going to buy something, I look for a discount code. So let's look at this as we've got a SMRP coupon here, right? We've implemented this program, and now we've got this coupon that's going to discount what we were paying now to the after part here, which is $290.07. So last month, real money, you were paying $359.55. Now that we popped this SMRP in place, you only have to pay $290.07. Well, that's a direct savings, real money savings of $69.48 in this example. This right here is where you save the money as the employer and where the employer admin fee is paid from. Okay. So in this example, after the admin fee of $46 is paid, the employer saved $23.48 on this employee. So that's $23.48 right back to the bottom line, real money that they can do whatever they need to with it. And, of course, obviously the great part too is the employee got all the things as well. So this employee in this example was filing as single. It'll be a lot more savings on any of the employees that are filing as married. We just wanted to give you a kind of a very conservative example in this. So the average annual savings per employee across the board is about $550 a year. But again, every company is going to be different. Each employee is going to be different. It's just going to kind of depend. But again, there's never a situation where this will ever cost your company money. It only saves you money. Yeah, you've got an extra invoice now. You're shifting some money around, sending it in different places, but it's netting out saving you money. So let's talk about the invoice you get from the TPA. We use the Capital Group. So what their job is we set it up where all the pieces, all the providers, the carriers in this involved with this, they send the bill to the Capital Group. They consolidate everything into one easy and simple to read invoice. Our goal in all of this is to make sure that whoever's administering it, it's simple, it's easy, and everything that we can do to make that happen, we want to do it. So that's why we pay for a third party administrator, a TPA. So what happens here is the bills go to them. They run it through their software and put it all into one easy, simple invoice. The thing I love about this is that you have one person to talk to, you have one bill to pay, you have one bill to reconcile. Instead of, if we didn't have this, you'd have three different companies that's going to bill on different days and different amounts, and you have to pay them different ways. It's a lot. So let's talk about the invoice and what all you're going to see here. So of course, it's got your company information at the top. It's going to have everything added up really easy there in one number there at the top. So like in this example, this invoice is $3,280.89. That's how much this company owes for this pay period. All right. So when you look down at the bottom, let's look at the first employee here. Everything is all in one spot per employee. It's an alphabetical order, really easy to read, right? So you got the employee last and first name there. We like to have a reference thing there, so that way you have really easy to see details as to what this piece is, what this deduction is for. Okay. So the type code actually lays it out. It's, that's the kind of the internal codes for the insurance and things. But on the left there, that reference is, breaks it down exactly what this person has. The next box there, it's the insurance company. So in this case, Paradigm's not insurance, but it's we've only got one column there, but you've got it broken down to where there's the employer and employee admin fees. In this example, the accident, disability, cancer, and the critical illness is all done through Allstate. And then the 20-year term life insurance was done through Manhattan Life. So you've got it all. We know who the carrier is, who the company is there in that column. And then on the far right, it shows the totals. And it's got a total down at the bottom, 326.28 for this. This is a month that was coming out for that employee. And then it's broken down easy and simple for everyone else as well. So you got Lisa there, shows all of hers, Sally's, you got John's, and it's just depending on how many employees you have, obviously it'll be multiple pages. So let's say, all right, John gets terminated for some reason. Well, when you're going to get the bill around the 25th of the month, you don't have to pay it till the 7th of the next month. So we've got a couple weeks in there to make changes. So Carrie Ward, she's our dedicated person at the Capital Group. She's fantastic. You email Carrie and say, hey, listen, John Smith here, he doesn't work here anymore. So you let her know there's some codes there. You can mark it on this and send it back. You can email them, whatever's easy for you. But so employment terminated. So that's a T. We mark a T down there by John, send it back to her. She'll change the invoice up, remove John from it, send you an updated invoice. Super easy, very simple. This whole process is designed around that to make things easy, simple, easy to read. So we have questions occasionally about, hey, I got this bill, Josh, why do I owe $3,200? Well, the majority of that $3,200 is coming out of your employees' checks. Now, there are real money admin fees that you're paying out, but as we showed early in the example, that's what you that all came out of those savings there, the coupon you clipped on. So I hope that made sense. If it didn't, or if you have any more questions, don't hesitate to reach out to us here at Citadel Benefits Group. You can email us anytime at VIP@Citadel, CITADELBG, like boygirl.com, or give us a call, 256-826-5674. Thanks so much for your support and being a valued client. If you need anything, let us know. See ya.